This is the Demystifying Crypto and Building Wealth podcast.
I knew that would be worth trillions.
That had never existed in human history.
There's been massive opportunities.
The #1 podcast to help you understand and get insights into the crypto world, blockchain technology, wealth building, and financial investing. Now, here's your host, Tico Tawari, the world's #1 most trusted cryptocurrency analyst and Wall Street veteran with decades of experience in the financial space.
Hello, friends. Big T here. I want to talk to you about what's going on with crypto right now. I'm looking at Bitcoin trading at 18,782. ETH is down, trading at 15 and change. And so it's very easy here to start thinking, oh my goodness, what's wrong? Did I make a huge mistake? Where's the bottom in Bitcoin? Here's a couple of things I want to talk about. One, on any given day, we have no idea how high or how low Bitcoin will go. And I remember early in my Bitcoin journey, I used to agonize trying to figure out what those numbers were. And at the end of the day, it's a complete waste of time. I don't know. Nobody knows. I mean, you can take a look at the chart and you say, okay, you know, you've got support at 17.5. If 17.5 doesn't hold, maybe we go to 15K. But who knows? If there's huge leverage positions, maybe we go to 12K. Maybe there's a short squeeze and we go to 30K. The bottom line is, in my opinion, it's a mistake to overly focus on the day-to-day action on the price of Bitcoin. The way that you really want to handle Bitcoin is to dollar cost average and let time do the heavy lifting with your position, because there are so many other factors going on behind the scenes that have nothing to do with us and frankly have nothing to do with Bitcoin. You know, one of those things that right now Bitcoin is getting caught up in is the fact that interest rates are moving higher. Now, why should Bitcoin care about what happens to interest rates? You know, it's a bit complicated, but I'll try and make it simple. So over the last couple of years, we've had many more institutions come into the Bitcoin market. And the way institutions allocate capital among their different sectors has to do with the prevailing interest rate. And so when interest rates are lower, they up the amount of money that they'll put into more speculative investments or investments that don't pay any type of income. So that would be early stage tech stocks, venture capital, and in this case, Bitcoin and crypto assets in general. So the institutional market for assets is still very immature. And so if you think about your own journey in crypto, let's say you've been in crypto for 5, 6, or 7 years, you actually have a lot more experience in this market than the average institution does. They've maybe been in this market anywhere from 6 months to 24 months. So they are just coming up the learning curve. And so in their mind, the way they view Bitcoin and crypto in general is just the same way that they would view allocating capital to early stage technology. And even though there are certainly similarities, but Bitcoin itself should not be confused as an early stage tech stock. It's something completely different, which, you know, that's fodder for another video. But that's where we are in the adoption cycle and in the understanding cycle within this new cadre of investors that have come into this space, which are the institutions. So yesterday, if you look at the 10-year Treasury, which is the benchmark that everybody looks at, which as they consider that the risk-free rate of return, you saw rates on the 10-year Treasury spike yesterday. Where I'm now looking at the Treasury numbers right now. 1-year Treasuries are trading at almost, let's have a look here, at 3.6%. That's more than 2x what you get in the S&P 500. So as interest rates go up, what you will see is capital get pulled out of equities, all types of equities, everything from blue chips all the way down to more speculative items, and capital get pulled out of crypto and moved over into other income producing investments like US Treasuries. So this is just something that is a short term, I would say a short to intermediate term allocation of capital that's occurring because institutions adjust the amount of money that they have allocated to different buckets of investment based on prevailing interest rates. And it has to do with something with net present value, which I'm not going to get into it. It's too long to get into that. But the point is that whether you're along tech stocks right now, or whether you're along Bitcoin or crypto, a lot of the activity, the price activity in those areas is not being driven by fundamental drivers. They are being driven by a change in capital allocation among the largest capital allocators in the world, and that is institutions. Now, bears will say, well, this is going to be, everything is going to be changing forever, and their institutions are getting burned in Bitcoin and in crypto and in tech, and there's going to be this mass migration to blue chips. That's just not true. It's just not the way the world works. I've been in the financial market since the late 80s, and sure, when people are unsure of the world, they all flock to safety, which is why you've seen big blue chip stocks on a relative basis do better than crypto and tech. And many other sectors of the market. But there's always this hunger for returns, for alpha, for outperformance. And the only way that you get outperformance is by going after growth. So the pendulum is overly swinging this way right now. Once the market gets a clear idea as to when the Fed will be done raising interest rates, you will see the pendulum swing back the other way. And then you'll start seeing that allocation go into these other growth areas, and coins like Bitcoin, Ethereum, the rest of the entire crypto space will benefit, as will the tech stocks. So in between now and then, what you're going to see is a lot of correlation between tech stocks and Bitcoin. I think that will continue. As tech stocks continue to sell off, Bitcoin will come under pressure. You'll see an inverse correlation with interest rates. So as interest rates go up, you'll see Bitcoin go down. How low will we go? I don't know. That's the truth. I just don't know. So I've already told you, I've looked at the charts. It suggests where the support are 17.5, 15K, somewhere in that area. The way that I am personally dealing with this is I just buy Bitcoin every single week. Every week, I just dollar cost average, and it's a piece of advice that many people give, but very few people take. But if you want to make sure that you are participating during down periods that an asset might experience, dollar cost averaging is one of the most sensible ways to do it. Because I do this all day long, and I'm telling you right now, it's impossible for me to predict what that bottom level is going to be. No one can do it. People can give you their best guess, but no one can do it. And so once you understand that even the brightest person in the world can't figure that out, then the best method, if you're a long-term owner of this asset, Bitcoin, which I am, is to simply dollar cost average. Don't worry about the day-to-day and focus on the long-term trend of adoption, which is significantly higher. And the beauty about Bitcoin is that it is a finite resource. They cannot make more of it, but the adoption rate continues ratcheting up and up and up and up. Now that imbalance can only last for so long before the price skyrockets higher. How long? I don't know. 3 months, 6 months, another year? I don't know. It doesn't matter. It's not 20 years. It's not 5 years. It's not even 3 years. Before the next halving, which is in 2024, you will see Bitcoin significantly higher and breaking out to all-time new highs. So from this price, 18K, just going back to 70K, what are we talking about? A 3X, 3.5X from here? That's a huge, huge, huge move. I would say that there's nothing that I'm looking at that has that type of return potential in such a short period of time. So again, there's going to be a lot that's going to try to draw your attention away from what really matters. And what really matters is the fact that the adoption story in Bitcoin is unchanged. Any volatility that we see, use it as an opportunity to add more. Just to make sure that you're making rational decisions, only use money that you're prepared to have sit there for a little bit and prepared the fact that it's going to be volatile. You never want to put scared money into Bitcoin because scared money makes bad decisions. So be rational. If you only put $500, put $500. If you only put $100, put $100. If you only put $50, put $50. But do something. take advantage of these cheap prices, because whether it's a year from now or 2 years from now, you're going to look back and you're going to think, oh my good Lord, I could have bought Bitcoin, sub 20K. It's unbelievable. I can't tell you how many times we've had that experience again and again and again and again and again in Bitcoin. It's the same story. And every single time people have doubts as to whether the Bitcoin story will gain traction, even though since the very beginning, Bitcoin's very beginning, we have progressed so far in terms of global adoption, institutional adoption, banking acceptance, global regulator acceptance, tradable futures. So whether you realize it or not, Bitcoin is here. It's an accepted asset class. And as an accepted asset class, it's wildly underowned. And so it is incumbent on you to take advantage of that at a level that makes sense to you. All right, friends, that's enough out of me. I'll catch up with you in another video. And I want you to always remember, let the game come to you.
So that concludes today's episode. Thank you for listening. We'd love to hear your thoughts in the comments section. You can find the show notes on www.tikatuwari.com. If you found this episode helpful, please share it with others, talk about it on social media, and leave a rating and review. Don't forget to subscribe so that you never miss another episode. Thanks again, and we'll see you next time.